Good afternoon and welcome to another installment in Maryland Realtors webinar series. Today's webinar features Jim Hall from Freddie Mac, Catherine Kramer-Dale from the Maryland Department of Housing and Community Development, and Joe Procopio from Fairway Independent Mortgage Corporation. As you have questions, please place them in the Q&A box and we will attempt to answer your questions at the end of the presentation. Thank you again for your attendance. We will send links to the slide decks and the webinar in the following week. For now, it is my pleasure to introduce you to Jim Hall.
Thank you, Adrian. It's a pleasure to be back to be able to speak to Maryland Realtors. We had a really nice presentation last year, and I really appreciate you inviting us back. Today we have two of our great Freddie Mac partners, Catherine Kramer-Dale from the Maryland DHCD to talk about the Maryland Mortgage Program, and Joe Procopio from Fairway Independent Mortgage. But first, I'd like to talk about Freddie Mac with you. Everybody hears the name out there, and it's important to know what Freddie Mac is. They hired me as an affordable lending regional manager, and I focus on relationships with housing finance agencies up and down the East Coast. And I'm out there building business strategies, with realtors like yourselves and lenders like Joe's Fairway Independent to promote affordable lending programs. So please feel free to contact me if you ever need to. You see the screen there. My email address is james_hall@freddiemac.com. And you'll be getting a copy of this presentation, so you'll have that at your fingertips if you ever need any future training, educational resources or things like that. So Freddie Mac, okay, what is Freddie Mac? Okay, well, we operate in the secondary mortgage market. We were created and chartered by Congress in 1970, and we're a mission-based organization. Our mission is to provide liquidity, stability, and affordability nationwide to the real estate marketplace. We also have smaller community missions, and those community missions, stabilize communities. They help prevent foreclosures. They help us expand credit in a responsible manner. It helps us educate future home buyers and real estate professionals, and it also helps us, support affordable rental housing. We have three main business lines. Okay? I'm part of the single family division, and single family is defined by 1 to 4 units. We also have a multifamily division, which is 5 units and above. And also we have our capital markets division, which handles all of our financial matters. Freddie Mac builds its business on 4 pillars. And those pillars are insights, mortgage products, education, and business solutions. Our insights help us. We have a tremendous data and analytics team, which provides us research studies and information we share with business partners like yourselves and like our lenders. It provides also speaking opportunities, and it really contributes a lot to the marketplace. We believe in education also. Financial literacy is the key to really, home ownership. It's really our responsibility to get out there and help future home buyers and future borrowers understand, the process of going through, buying a home and then going through a mortgage application, because it can be quite daunting. And, we're all fiduciaries, in this effort. The prospective home buyer comes to us, and really puts their trust in our hands to really give them the right advice. Also, Freddie Mac offers mortgage products for companies like Fairway Independent to use, and also Maryland DHCD to use through the Maryland Mortgage Program. These programs on the affordable side focus on low to moderate income folks. We're really out there to help work workforce families and the underserved. And also we promote, low down payment options. Then we also have our business solutions, which are resources and tools that we provide at no cost to real estate professionals like yourselves. And at the end of my discussion here, I'll go over, a couple of very, very important tools that hopefully you'll find value in and use them when you're setting your business strategies. I always love this screen, with the bubble chart here. This is the affordable ecosystem. And, what we did, we thought about how many hands are involved in a purchase money transaction, and then when it turns into a loan application. And like I said earlier, it could be quite daunting for the prospective home buyer, especially if this is the first time they're going through the process. Now you see at the top, we have real estate professionals like yourselves and loan officers like that work for Fairway Independent, because really the genesis of the transaction starts with you. You are really like the first door that the prospective home buyer goes through, through this process. So, the better educated they are to go through this process, the better the whole experience is going to be for them. Now, housing finance agencies, you see them at the, at the bottom there. They're like mini Freddie Macs. They're working, almost like in the secondary mortgage market, to where they have programs that lenders use, to present the prospective borrowers. And then they buy the mortgages, from the lenders and then place them into the secondary mortgage market. And if it's a conventional loan, like Maryland Housing can sell that to Freddie Mac. And then what Freddie Mac does is we place them into larger securities. And that's where the liquidity mission comes in play. Okay, we provide liquidity to lenders and to housing finance agencies to continue to put out these, affordable programs in the marketplace. So, hopefully that puts it in a better perspective for you. So I want to talk about housing finance agencies. Okay, a lot of people don't know what they are. And, I myself, I worked for a housing finance agency for 12 years. If you notice the way I speak, I have a Southern New Jersey, Philadelphia accent. I live here in Southern New Jersey, and I worked in Trenton for 12 years at New Jersey Housing. So I intimately know, what a housing finance agency is. But quite frankly, I really didn't know, where they fit into the affordable ecosystem is really until I started working for them. So, back in the 1960s, when Lyndon Johnson was president, he had a vision for America called the Great Society. And, he's most famous for signing the Civil Rights legislation and the Voting Rights Act in 1964 and 1965. But in 1968, he also signed the Fair Housing Act. Okay, and the Fair Housing Act, was part of that vision to provide, affordable lending and housing to lower to moderate income folks. And with that, Johnson's administration knew they couldn't do it all on a federal level. So they took it to the states, they took it to the counties and said, this is what we need to do. You're the experts in your areas. How can you help? So states and counties started creating housing finance agencies. My old agency was created in 1967 up here in Trenton. Catherine can speak to when the Maryland DHCD was created during her presentation. So through the 1960s, 1970s, and 1980s, these housing finance agencies were created to help with, providing down payment assistance, rental assistance, assistance for single-family home ownership, and multifamily programs. So again, they're mission-based organizations. Some are instrumentalities of government. So they make for a perfect partner for Freddie Mac. Two mission-based organizations coming together to help with affordable lending. So Freddie Mac created a program called HFA Advantage. This is our most affordable program we have in the marketplace. It's a 3% down program. And this program can only be used by lenders like Fairway Independent through the Maryland DHCD. Okay, a lender cannot originate an HFA Advantage loan and deliver it directly to Freddie Mac. Again, if you know what an FHA loan is about, they require 3.5% down, 96.5% LTV. We're 3% down. So it makes it more affordable than an FHA loan, from a down payment perspective. We allow for 105% total loan to value. That allows for a down payment assistance second mortgage to be put behind our first mortgage. There's income limits and home buyer education requirements on these loans, but we defer to the housing finance agencies to determine their requirements. And also, we require mortgage insurance on anything over 80% LTV. So on a 97%, 3% down, we offer charter level mortgage insurance. And what does that mean? It's subsidized, and it's much cheaper than normal mortgage insurance. And I'll illustrate that for you in a few slides. So over the past 50 years, the impact housing finance agencies have made has played a key role in the nation's affordable housing ecosystem. Again, they serve workforce families, lower to moderate income folks, first-time home buyers, and other specialty segments. And we're very proud to say that housing finance agencies has helped with the purchase, development, and rehabilitation of more than 7 million affordable homes, totaling of $450 billion in financing. So to give you some high points of the HFA Advantage mortgage, it's for one unit only. It can be used for purchase or no cash out refinancing. That's determined by the housing finance agency. Housing finance agencies all over the country are individual. They're homogeneous. They're not the same. So each one has its own guidelines, its own charter, its own mission. So Catherine can address, what type of loan products they offer as far as purchase money and refinances. Again, as I mentioned, it's a 3% down program, 105% total loan to value. Lenders have to underwrite this through our automated underwriting system, which is known as Loan Product Advisor. The acronym out there in the marketplace is LPA. There's no reserves required, but I always encourage, if there's money in the bank for the borrower, have them please put it on the application, because when it goes through the automated underwriting system, it looks at layers of risk. So, if there is money in the bank, that helps with the layering of risk. Again, income limits are established by the housing finance agency. It's available to first-time home buyers, repeat buyers, and borrowers seeking no cash out refinances. Again, that's determined by the housing finance agency. And we have the flexible MI, which I mentioned. So again, it's a great alternative to FHA lending, which is much more expensive compared to conventional lending. I mentioned the subsidized mortgage insurance, and this is a great illustration of that. If you look at this chart here in the bottom right-hand corner, the 35% number, that's what a consumer pays on a standard conventional loan at 3% down. On the HFA Advantage mortgage at 3% down, they pay 18%. So the savings is almost half in mortgage insurance for the borrower to go through an HFA Advantage mortgage program versus a normal standard conventional product. I mentioned earlier about the missions that Freddie Mac has and the missions that housing finance agencies have. Right now, one of our community missions is to bridge the gap between white, non-Hispanic homeownership and minority homeownership, specifically in the African American community and the Hispanic community. And housing finance agencies can help us with that mission because they've been reaching the underserved for many, many years. So this is an illustration of, single family loans in 2019, where housing finance agencies home buyers median income was $50,770, and versus the nationwide average median income of $93,200. Again, it's very indicative of who we're helping in the housing finance agency world. And also housing finance agencies have been, at the forefront of making loans to people of color. And this is a great chart was provided to us by the National Council of State Housing Agencies, which is the advocate for housing finance agencies in Washington, D.C. And the red line takes a look back to 2001 through 2019. And as you can see, the red line is the percentage of loans made to people of color by housing finance agencies. The blue line is the market. And housing finance agencies have been either above or at the market many of those years. So again, that will help Freddie Mac with its mission in equality of lending. And I mentioned one of our pillars is the resources that we provide to you. So you as a realtor, I know you're getting bombarded with information out there, but Freddie Mac, being an industry leader, will provide you, with the most up-to-date information available to you. So I highly encourage you to subscribe to our Real Estate Professional Resource Center. Freddie Mac won't spam you. We're not going to sell your email address to anyone. So it's very important to, be in the know, be, in front of the market and be ahead of your competition. So please, take a look at this. If you feel like that it's worth your while and it will add value, sign up on it. And like I mentioned, you'll be getting a copy of this presentation, so you don't have to jot down that long web address. You'll get a copy of that. CreditSmart, this is one of the greatest tools I feel that Freddie Mac has created and offers to real estate professionals. Okay, it's a financial literacy curriculum. It's 12 modules, and it helps consumers as far as managing credit, money management, home ownership, foreclosure avoidance, and more. It prepares future home buyers for sustainable home ownership. It's free, so they don't have to go and pay a counselor for this. It's in multiple languages, and also another beautiful thing about CreditSmart is if you would like to be a community leader, in your area, you can become a CreditSmart certified trainer. And what do I mean by that? It means you go through a Freddie Mac curriculum and you become a certified trainer, and then you can be an instructor in whether it's in your town halls, your churches, your office, your community centers, your fire halls. You can bring financial literacy to the millennials and the younger people that are coming into the market. I can tell you that really financial literacy is really not being taught in high schools or colleges. Way back when I went to high school, I remember I had a business math class, and they readied us, to prepare a budget, how to handle bank accounts, knowing what a debit and a credit is, and it really helped me as far as being a homeowner. Unfortunately, our society's gotten away from that, and us as fiduciaries, we're giving you the opportunity to get out there and, again, like I said, be a community leader, educate those millennials, and help them through this process. If you're interested in becoming a CreditSmart instructor, please email me. I will get you in contact with the Freddie Mac managers who manage the CreditSmart program, and they'll give you the information as far as getting involved in the train-to-trainer program. And part of the CreditSmart suite is Homebuyer U, and Homebuyer U focuses primarily on homebuyer education. This is a 6-module part of the curriculum, and it's self-paced. It fulfills first-time homebuyer education requirements for all of the Freddie Mac programs. It's very interactive, and my slide unfortunately says they're offered in English only. I'm very proud to say it's offered in Spanish now also, so I'll have to update that. So if you have a Spanish-speaking customer, they can go through this also. So again, once you get a copy of this, please go online, check it out, see if you're interested in, presenting this to your prospective home buyers, I really think it'll be worth their while. Again, the price of it is free, and power is knowledge, and knowledge is power. And the more these younger home buyers know, getting into this process, the better they're going to be in the long run. So with that, I'm going to wrap it up, and I'm going to turn it over to Catherine. And you are the critical link. Like I mentioned, the genesis of this transaction starts with you. So you really set the tone for that prospective home buyer to go through this journey of obtaining mortgage credit and becoming a homeowner. So the more the better it is going to be for the consumer. So we're out there to blow up these myths out there that are in the marketplace, and hopefully you found value of the information I presented to you, and we're all in this together and helping these young consumers out to become home buyers. So with that, I'm going to stop sharing my screen, and I'm going to introduce you to Catherine Kramer Dale, who is one of my great colleagues. She works for the Maryland DHCD, and they promote the Maryland Mortgage Program. And all I'll say is the state of Maryland is so lucky to have this housing finance agency for their constituents, because they do a lot of great things for the consumer. So hopefully, if you're not partnering with Catherine and her agency, hopefully you'll be able to establish a new relationship after this webinar. So Catherine, welcome.
Oh, okay. Well, first of all, thank you very, very much for having me as a guest speaker. And again, we have about 15 or 20 minutes. So I'm going to do mine a little different. My name is Catherine Kramer Dale. I'm with the State of Maryland Department of Housing. Been here for, probably 15 years now, but I come from private industry. Did processing, underwriting, closing, and I was a mortgage loan officer. Never been a real estate agent, so I want to thank you guys so much for your patience dealing with all of your customers and helping them find the right products for them to achieve that American home dream of buying their home. So I'm doing mine a little different. Yes, there is a PowerPoint. I'm going to show you where the PowerPoint is on our website. It's always somewhere you could go to refer to it. And Adrienne from the Maryland Realtors is also, as many have asked on the chat, she's going to be sending out all of the PowerPoints to everyone within the week so that you'll actually have something on hand. But I'm going to go right into the website, and I'm going to dive in here, and I'm going to show you the tools that you can use as an agent to help your clients figure out what the best product is. Now, as Jim mentioned, and I'll reiterate, and we even have Joe on the call, whenever you are talking to a customer and you think that they would benefit from using one of our Maryland Mortgage Program products, which I'm going to show you in a moment, you do have to apply directly through one of our approved lenders. And we have an expert with us right now, that's Joe from Fairway, and he's going to speak when I'm done. So you've already gotten in with this. So the website is www.mmp.maryland.gov. And when you're on the website, you'll notice it's predominantly yellow, and this is the toolbar. And when you slide all the way over to Professional Portal, you're going to click on it. You're going to scroll down, and you're going to pass this big yellow box, and you're going to see a man with a pair of glasses, and it says Program Information. Now, one thing I'll share with you is we're very transparent as the State of Maryland Department of Housing, the Maryland Mortgage Program, CDA, which stands for Community Development Administration. This website is for anyone to log on. You may have consumers now that are very well educated that may have visited our website. You as an agent, you don't have to have a magic password to get in here. So it's available for homeowners, agents, lenders, anyone can come on here. So when you click on see program information, click on learn more. I kind of laugh when I do this, but I say,
Catherine, you need to share your screen. I'm sorry to interrupt.
Oh, I thought my screen was already shared. I thought it was.
No, we're just seeing you.
Okay. Adrienne, are you able to share my screen? Because I thought it was already shared.
I cannot. You'll have to can you go to the share screen button at the bottom?
Hmm. Hmm. I apologize. I thought it was already shared. Now, can everybody see?
Yes.
Okay, perfect.
Yes.
I
Okay,
apologize. I thought everyone could see. So I'll kind of back it up just a little. I'll go back here. Here's the Maryland Mortgage Program. This is our main website, www.mmp.maryland.gov. When you're on our homepage, you're going to scroll to the right-hand side where it says Professional Portal. You're going to scroll down. You're going to pass the big yellow box. You'll see a man with a pair of glasses. It says Program Information, Learn More. Okay, so here is the window to our brain. One of the first things I want to show you, again, as an agent, you're always going to want to reach out to one of our approved lenders that you have a relationship with. And as I indicated, we have one of our top performing lenders, Joe with Fairway, on here. But if you ever had any questions, here is our CDA contact sheet. When you come into here, you're going to see that there is a link where you can email our office directly if you ever have any questions. It is singlefamilyhousing.dhcd@maryland.gov. You certainly could call this number as well, even though most of us are still currently teleworking due to the pandemic. You can always reach out to this email if you have any questions or would like to even request to have a training for your office on the Maryland Mortgage Program products. When I hit the back arrow, I'm going to get back to the list of the bullets. I'm going to briefly go over the programs that are available. When you're dealing with a client, you have the option of either qualifying them as a true first-time home buyer, or what's amazing is we now have products that are called the Flex. You do not have to be a first-time home buyer. You could literally have a borrower that says, I currently own a home, but I'm in a situation where I'd like to sell my home and I would like to buy a brand new home. With any one of our programs, you cannot be on a deed or have any interest in any property anywhere in the world at the time of this closing. But you don't have to be a first-time home buyer. You could literally be a repeat buyer. So on the right-hand side of the rate sheet, these are called our Flex products. The lenders are very familiar with all of the programs and the products that are available, but wanted to share with you, you don't have to be a first-time home buyer to do the Maryland Mortgage Program. Now, on the left-hand side, you do have to be a first-time home buyer, and there are 3 products: the First Time Advantage Direct, the First Time Advantage 5,000 DPA loan, and a First Time Advantage 3% of your total first mortgage loan. If you notice, the rates on the left-hand side are lower than the rates on the right-hand side. On the right-hand side, the First Time Advantage Direct is the same exact product as the Flex Direct. The First Time Advantage 5,000 DPA loan is the same as the Flex DPA loan. And the First Time Advantage 3% DPA loan is the same as the Flex 3% loan. If you notice when you scroll down, there's not any more additional products on the left-hand side for first-time home buyers, but on the right-hand side, for someone who is a first-time home buyer or not a first-time home buyer, we have these amazing additional products called the Flex 3% DPA grant or the Flex 4% DPA grant. I'm going to briefly go over these standard products with you. The First Time Advantage Direct and the Flex Direct, once you and as well as your loan officer has determined which side of the rate sheet they fall on, the First Time Advantage Direct is designed for someone who doesn't need any money from the state of Maryland. Your lender may find that this is actually a very appealing product due to the fact that it's the lowest rates on our rate sheet. And again, maybe the borrower got enough seller help. Maybe you were able to negotiate more seller help for them and they don't need any money from our agency. Or maybe they got a gift, or maybe they even stacked it with another city or county program out there. And it was more advantageous for them to get our no DPA products and get the lowest rate. The next 2 products, I'm going to lump them together as 4. the first time advantage 5,000 and the flex 5,000 and the first time advantage 3% loan and the flex 3% loan, these are the loans. These rates are for your first mortgage. There is no rate attached to the second lien, which is a down payment assistance portion. The down payment assistance for the 5,000 is $5,000. The borrower gets $5,000 to help them with their down payment and closing cost. It is truly recorded as a second lien. They do not have to make any payments, but it does have to be paid back when they sell or refi. Well, the first time advantage 3% loan and the flex 3% loan is the same mechanics. This is the form of a down payment assistance. It is 3% of your total first mortgage, which includes MI. And this is the rate for the first mortgage. There is no rate attached to the second lien, which is the down payment assistance. And they can use that money for down payment and closing costs. They have to promise to pay it back when they sell or refi. Well, one thing I want to point out to you, which I show the lenders all the time, is, for instance, if you looked at the first time advantage 5,000 and you looked at the first time advantage 3% loan, they're the same exact products. The rates are even exactly the same on the left side and on the right side. So you'd say, well, Catherine, why would I pick the 5,000 versus the 3% loan? It's all about the money, right? What is getting the most amount of down payment assistance for your client? If you have to have the same guidelines and you're meeting the same eligibility requirements and the rates are the same, pick the product that's the bang for the buck for your borrower. The first time advantage 3% DPA loan or the flex 3% DPA loan is 3% of your total first mortgage, again, including your MI. So if you're doing a loan that's $188,000 or higher, let's say you're doing a loan for $275,000. If you took 3% times that, the down payment assistance may add up to more than the $5,000. So this is a product that actually is being very, very widely used. A lot of lenders are using the 3% product. Again, don't forget, this money is never forgiven. This money is not deferred. It doesn't go away. These are true required second liens. They're recorded as second liens, and you have to pay them back when you sell or refi. We do not like to subordinate. The other two products that are our standard products, as I mentioned, are the Flex 3% grant and the Flex 4% grant. These are very popular. Now, yes, you've noticed that the rates are a little bit higher, but they really should have put the word free next to these. It's 3% of the total first mortgage down payment assistance, and it's 4% of the total first mortgage down payment assistance. And yes, it's at a higher rate, but you know why? Because there is no recorded second lien. That down payment assistance for the 3% grant or the 4% grant is for down payment and closing cost, but you're not having to record it as a second lien. When that borrower is in a position and they reach back out to their lender, or the lender reaches back out to them to see if they're in a position and ready to possibly refi, they don't have to pay this grant money back. So again, loan officers are showing them the 3% product at this rate that they have to pay back. And then they're showing them this 3% product and maybe even the 4% product at a higher rate, but they don't have to pay the money back when they sell or refi. These are our standard products. Again, you can only originate them from working with an approved Maryland Mortgage Program lender. And we do have Joe on here. Fairway Independent is a phenomenal lender. So he's going to speak with you in a few moments. Below this, there are two additional products. Well, really, there's four, but I'm only going to mention two. The Montgomery County Homeownership Program and the Maryland Home Mobility Program. These are both still listed on our rate sheet, but they are currently closed. Please keep your ear and eyes to the pavement because these programs more than likely will return after July 1st, because that is when our fiscal year starts and generally funding is made available for these products. The Montgomery County program obviously is to help people purchase in Montgomery County, Maryland. It's a down payment assistance program that Montgomery County came to us with to help them with purchasing in Montgomery County. The Maryland Home Mobility product is designed for somebody who is disabled or caring for a disabled person. But again, notice they're currently closed. When they become available, they will be on the rate sheet with rates. The conventional refi, well, no, the rate's not that appealing, but this product is available if you do have a borrower that's in a situation where they have a Maryland Mortgage Program second lien that they want to refinance out of, but they're not in a position to pay it off. Then if they refinance with our conventional refi, we will subordinate a DPA second lien. The Maryland Smart Buy. Woo, this is a hot product. If you guys aren't talking about this, you're leaving it on the table. The Maryland Smart Buy product is for first-time home buyers. It is for somebody who has student loan debt. They have to have at least $1,000 of student loan debt. It is a Fannie and a conventional only. It does have a couple moving parts. Our standard loans are at a 97% fixed 30. This Maryland Smart Buy 3.0 is at a 95% conventional. That's the first mortgage. The second mortgage is optional. If the borrower wants down payment assistance, they can get down payment assistance for $5,000. They do have to pay that back when they sell or refi. Where all the magic happens is the Maryland Smart Buy student loan portion. Your loan officer would ask the borrower for all their student loan debt in one big pile. And they would say, okay, listen, if you qualify for the Maryland Mortgage Program with the Maryland Smart Buy, I'm going to make sure you qualify. And if you do, then the state of Maryland is going to pay off 15% of the purchase price up to a maximum of $30,000, whichever is less of your student loan debt. If you stay in the program for 5 years, poof, it is forgiven. This one does have a 5-year seasoning requirement. And if you stay in it for 5 years, that student loan portion that we paid off will be forgiven. If you leave within the first 5 years, it is deferred 20% each year. Well, what's the catch? When you walk away from the closing table, the borrower cannot have any remaining student loan debt. So again, if you take all their student loan debt and put it in a big pile, if they owe 50, 60, 70,000 or more, this probably is not a good fit. If they owe between 28 and 30,000 or less, that would be great. Because again, all the loan together, we're only paying off 15% of the purchase price up to a max of 30,000, whichever's less. So if the borrower has any remaining student loan debt, they have to be prepared to pay that off because you cannot walk away from the closing table owing any student loan debt. If I hit the back arrow in all of these lists of resources, there are collateral and fact sheets that are available for anyone to read about the products. There's the Maryland Smart Buy. There's any of the Flex products. There's any of the First Time Advantage. So if you read over the fact sheets and you had any questions, again, you could always come to the contact sheet and reach out to our single family housing, or guess what? Even better yet, reach out to Joe. Ask him any questions that you may have about any products that you think would be a good fit for your borrower. Now, again, I realize we have a very limited amount of time to speak with you. So there's a couple things I do want to show you. Under training, there is a PowerPoint that, again, Adrienne will be sharing with you guys when she mails them out. But this is a Maryland Mortgage Program PowerPoint. Certainly feel free to read it. It's 52 pages. I was not going to sit here and read 52 pages to you. There's also a PowerPoint on the Maryland Smart Buy. It specifically goes over this product directly. That's a very good tool to use. Also, this is huge marketing tools. We want to provide kits to you. When you click on here, you'll see that you can order up to 100 kits. You can send them to your office. You can send them to your home. You could send them to a church or a rec center or a homeowners event that you're possibly doing. You can order up to 100 of them and they're free. There is a social media toolkit section as well, where you can take any of these images. We give you instructions on how you can print them, and you can even logo your name and information on there to not only market yourself and the lender that you're using as a Maryland Mortgage Program lender, but also it markets the Maryland Mortgage Program products. We also have Facebook and Twitter and Instagram. So we'd love for you to tag us in your posts. And when I hit the back arrow, again, there's always these program fact sheets. So if you ever need to know anything about the products, these are giant cheat sheets. The other thing too I want to mention, as Jim mentioned, is we are an HFA. the state of Maryland Department of Housing is a housing finance agency. So when you're doing any one of these products, even the Smart Buy, if you're doing a conventional product, if your area median income, and Freddie Mac has a chart on their website, it shows the area median income. If your borrower's qualifying income is below the 80% AMI, with the Maryland Mortgage Program, you could take advantage, as Jim showed you in his slide, as getting the HFA preferred discount, where your MI would drop from 35 to 18%. So the lenders find this to be rather appealing because, again, if they're using a product where here, maybe they could literally reduce the MI. Maybe with this money here, the 3 or 4%, if the borrower had money left over and you drop from a 35 to an 18%, if you have any cash left over, sure, you could do a principal reduction, but you could do a borrower single premium and pay out the MI up front. Now, again, I know we have a very limited amount of time, and I'm trying to show you as much information as I possibly can, but the PowerPoint will be made available to you. I want to thank you guys so much for your business. We couldn't do this without you. We have hit over 1 billion in production for the second year in a row. Note, the pandemic did not make this market stop. And as you guys are saying, I know you're extremely busy. We want to thank you. We definitely want to make sure that you connect with one of our approved lenders. You can always go in here and type in find a lender. It will give you a list of all of the lenders that are available. And if you don't have a relationship, now I'm going to introduce, or I guess Jim will take over, but we will definitely introduce to you Fairway Independent. Jim, take it away.
Yes, Catherine, thank you. That was a great overview. Like I said in my introduction, you know, the constituents of Maryland are so lucky to have your agency. And also hopefully the realtors in the audience will see that way also. You know, you bring so much to the table, so many innovative programs. The student loan forgiveness program is really, really at the forefront of, you know, of housing finance agencies throughout the country. And I can tell you, a lot of housing finance agencies are envious of the Maryland DHCD for having that. So thank you for you know, participating today. And
You're welcome. Thank you for having me.
all right. And to keep the theme of great partnerships going here, Fairway Independent Mortgage Corporation is this year's winner of the Freddie Mac Rise Award. And that's a prestigious award that you know, Freddie Mac bestows upon a lender for originating the most HFA Advantage programs nationwide through housing finance agencies like the Maryland DHCD and the Maryland Mortgage Program. And Joe Procopio is a tremendous advocate of that program. He's a tremendous advocate for affordable lending and also a great partner with the Maryland DHCD. So with that, Joe, you can take yourself off mute, and I'm going to give you the floor here, and you can share your screen. And thank you for being with us, my friend.
Hello, good afternoon, everyone. Thanks for joining us, and thanks for having me. I am Joe Procopio with Fairway Independent Mortgage. We are a large lender. Some of you may have not heard of us, but we've been growing. We've done actually over 30 billion already through May. But we have a hometown feel, so we're just starting to get into national advertising. But we're making waves. So if you haven't heard about us, you will be hearing about us. I want to present mostly talk about Freddie Mac loan programs, but I also want to touch on the Maryland Mortgage Program. And if you're wondering how the two tie together, actually Freddie Mac, which is one of the two large GSAs in the country, or GSEs rather, government service enterprises, purchase most of the loans, and they purchase a good percentage of these loans from Maryland, from the Maryland Mortgage Program. The most popular program with the Maryland Mortgage Program for us has been the MMP First Advantage 3%. We think that one gives the most bang for the buck. I'm going to share my screen here. Hopefully everyone can see what I've got on here. And I'll just slide through it as we go. So as far as the the Freddie Mac programs. Freddie Mac offers a lot of programs in terms of affordability, starting with the 3% program, 5% down, 10% down, 20% or more if you want to avoid mortgage insurance. Advance my slide here if I can figure that out. We're all having difficulty with that today, as you can see. You cannot see my screen. Okay.
No, we just see you, Joe.
Oh wow. Okay, I'm having the same problem. How about now?
Oh, we got it now. Great.
Okay, got it now. Now, if I can figure out how to advance it. Okay. All right, how about that? Okay. You see my second slide yet?
Yes, it did advance.
Okay, great. Okay. So our maximum mortgage amounts, let's talk about that. Freddie Mac does not purchase jumbo loans. However, the bar's set pretty high for what they will purchase, and that's all county related, but really MSA related, multiple statistical area. So in the Washington, D.C. area, a lot of our Maryland counties that are close to D.C. fall into those limits, which are 822, 375 for a single unit, which means that's what Freddie Mac will buy a loan up to. The Baltimore area, such as Carroll, Howard counties, Baltimore County, Harford County, it's 548, 250. Higher units are available for multi-unit properties. Freddie Mac advertises a 620 FICO score as their lowest score. That's all dependent, though, on the loan characteristics. As you know, as lenders, you'll hear us talk about DU and LPA. LPA is Freddie Mac's version of the artificial intelligence that underwrites the loan. So what we put in the system, Freddie Mac will come back and tell us if it's an accept. We're finding that you really need to be up around a 680 if you're trying to do an affordable product. But each case is different, and the lender needs to gather the information and run it through those systems. You don't want to accept a pre-approval letter that's been done without having it run through the automated underwriting system. Loans are going to have PMI based on credit score and down payment. And as Jim showed you on a chart, that is much lower with the MMP if the borrowers are in the 80% income bracket. They also have a program specifically outside of MMP, which is for affordable based financing, which has kind of an in-between PMI, and I'll get into that in a couple slides. As far as seller concessions, we're not seeing a lot of that, are we, folks, right now? Hopefully one day we'll be out of that and we'll start seeing a normal market again. I know you all have been busy with spinning your wheels, just like we are, but hopefully there's light at the end of the tunnel here. As far as what we're seeing, as far as concessions, like I said, we haven't seen much at all in this market, but Freddie Mac does allow 3% from the seller for loans with a 90% loan to value or above, and 6% if you're putting 10% down or more. Slide here. Gift funds are allowed for the down payment or closing costs on all loans other than investment properties. Second home and vacation homes require a 10% down. Rates are pretty much the same for a second home or which is a vacation home, as they are for a primary residence. Investment homes, one unit properties require 15% down. Primarily, we're seeing in that market a 20% down, because if you do 15% down, you're going to have mortgage insurance on an investment property, and it does not go away, unlike with it's more like an FHA where it stays on forever, unlike a typical 20% down where you don't have mortgage insurance. 2, 3, and 4 unit properties require a 25% down payment, and Freddie Mac allows ability to finance up to 10 properties with restrictions. That's 10 properties, conventional finance properties. This basically here is a heat map of the loan limit ranges, which I was talking about earlier. and you can see the gray areas are all 548, 250 max, and you get into that area of the orange, then those are 822, 375. We don't have any areas in our specific geographical area that fall in between there. It's either the high or the minimum. The Home Possible mortgage, this is what I wanted to talk to you about as far as the affordability program. This is based on 80% of area median income. Does have a reduced mortgage insurance, which if you remember that chart, you had 18 and 35. This is 25% for either a 3% or a 5% or a 10%. It falls in the same category of the mortgage insurance, so it is reduced. Another advantage to this program, other than of course the 3%, is that it does allow no cash out refinancing. They do have caps on the add-ons. If you've ever heard of the add-ons, such as condos cost more generally, credit scores, they kind of put a cap on those when you're using the Home Possible product, which is nice. It'll price out much better than in terms of rate than a standard Freddie Mac or a Fannie Mae loan even. The Freddie Mac Borrower Smart, this is a component to the Freddie Mac Home Possible and also the Home One. It can be available with the Home One. And what it is basically a free grant money for the borrower taking all they really need to do is take a class, which we, the lender, line them up with. Now it's either $1,000 or $1,500, depending on whether they make 50% of the AMI or 80% of the AMI. It's not available in all states, but it is available in Maryland. It is available in Virginia as well for those of you that step over the line a little bit. Thank you. Conventional renovation loans. Freddie Mac stepped into this arena a few years ago by allowing renovation loans, such as it's very similar setup to FHA 203K, but this offers an alternative, especially when a customer wants to purchase as an investor, where FHA is strictly owner-occupant. Freddie Mac does allow investors on the one close renovation loan. It's a good product, and yes, we do offer it. Now, with that being said, we do offer a lot of products, full array, jumbo, FHA, VA, USDA. I have been in the business for 37 years. I have a full-time assistant, and we are always looking to grow our business by adding value to yours. So anyone, please take my number down. I'd love to hear from any of you with questions or just to consult me about any scenario you have. Thank you. These are my numbers.
All right. Thank you, Joe. And to our realtor audience out there, hopefully that gave you a great overview of the products that Joe and his company presents to consumers out there, and you can see why they're a great partner with Freddie Mac. They are out there trying to help the lower to moderate income folks, and right now, due to inventory issues and supply and demand issues, it is really a tough world for the first time home buyer looking for affordable housing. With the bidding situations out there, it really shuts out a segment of our community who was out there trying to purchase homes. So it's really important to have professionals like Joe and Catherine, yourselves and myself out there, fighting the fight for these young people to be able to attain home ownership, get out of the renter ranks, get out of mom and dad's basement. I'm very proud to say that my son and his girlfriend have signed a contract, and he's 28 years old and he's buying a home. He's flying out from the nest here. So, it was a long and hard process for him and his girlfriend up here in New Jersey, because like all the issues I just stated, they were, getting shut out on a lot of properties. And, fortunately, they got in with a good realtor and loan officer who was able to, find them a property to fit their needs. So we're all in this together as fiduciaries for these, home buyers, and I really want to thank you for joining us today. Right now, I'm going to go into the chat room. I think we have quite a few questions, and Catherine and Joe, if you can be ready for this, and I'll start at the top here and see what we got. Let's see, Carol Hess asked, will we be able to get a copy of the slides? We addressed that, yes. Adrian will be making them available. Dick Stoner asked about the MI. Maybe Joe, maybe you want to handle this. 18% versus 35% of what? Surely not the whole borrowed amount. The percentage does not really tell us anything without clarification. Could you clarify for our realtor audience what that 18% and 35% means, Joe? You're on mute, Joe.
I can certainly clarify that. So what that basically means is the housing finance agency, such as Maryland CDA program, they're requiring less coverage for the lender to go out less and get less coverage for the loan. So how that trickles down into what your buyer is paying, there's a MI chart, okay, that we go by, and depending on the score and the loan to value and the coverage will determine how much the premium is. Okay, so if you're only covering 18% versus 35% of the home, if the mortgage insurance company's only asked to be covered that, so basically that's knocking down that premium by about half, because so basically if you have a 97% loan and you're covering 18, you're taking that loan only down in their eyes, in the investor's eyes who's buying that mortgage, you're taking that loan down to that'd be a 75% loan to value, because they're getting coverage on that. Okay, that's what that basically does. So to your buyer, it means a smaller payment to the mortgage insurance company, because Maryland Mortgage Program or the Home Possible program is not asking us to cover as much of the risk for them.
Great, Joe. And again, the Maryland Mortgage Program is at 18%, and the Home Possible program, which lenders
25.
deliver directly to Freddie Mac, is 25%. Okay. Another comment in here from Tisa Clark. I took the CreditSmart Train the Trainer to be certified to teach it. Thank you, Tisa. Great. Hopefully you enjoyed teaching that class. And she also says, I'm also a former Freddie Mac executive. Well, okay, we got Freddie Mac alumni tuning in. Thank you, Tisa, for that comment, and hopefully you enjoyed your years at Freddie Mac. Let's see. Lisa Hoover says, can you provide your email address so we can reach out? I had put it in the chat box, but I'll repeat it again. It's james_hall@freddiemac.com. It's james_hall@freddiemac.com. And let's see what else we have in here. Now, Lisa Hoover asked, can you repeat the web address? It doesn't specifically say to whom. My web addresses will be in my PowerPoint presentation, as I believe Catherine's and Joe's are also. So once Adrian sends them out to you, Lisa, you'll have all the web addresses. Richard Horvitz asked, can a Virginia resident utilize this if moving to Maryland? And Joe had responded back. I don't know if everybody saw it. Yes. So I know that you cross borders there in Maryland. Just so you know, if you do cross borders, not only with the Maryland DHCD, Freddie Mac partners with the Virginia Housing HFA, the Housing Finance Agency in the District of Columbia, and to the north of you, the Housing Finance Agency in Delaware. So we're partners with all of them.
And the Montgomery County
and
HOC as well.
Yes, and HOC in Montgomery County there in your state also.
Yeah, I participate in all of those as well.
Okay, and let's see. Richard also asked, is that 50% or 15% of student debt? Now, Catherine, I believe that's probably asking about your student debt forgiveness program.
It's 15% of the purchase price up to a max of 30,000, whichever is less. So it's 15.
All right, thank you.
Uh-huh.
And then Carol Hess asked, how can we get Howard County into the Washington, D.C. MSA? I'll leave that up to the Maryland folks to answer that one. I don't want the New Jersey guy to answer that. You have any idea, Joe or Catherine?
I would say that's the Federal Housing Finance Agency. That's Mark Calabria and his group.
Yeah, there you go. We'll leave that up to our conservator. Yeah, we have no power over that, unfortunately, Carol.
Right.
All right, Lisa asked, you indicated that the credit score should be 680. From a Freddie Mac perspective, I'm not going to go on the record of saying what the credit score should be when LPA does the layering of risk. All factors are considered. I think Joe was just stating that he sees a trend where 680 is the comfort level, but I'll let Joe address that.
Yeah, I'll say 680 is the comfort level when you have that biggest risk there, which is the low down payments. It's pretty much looking for a 680 or above for low down payments. Now, that's not all Freddie Mac products, obviously. That's their low bar is the 620, but that would be without all those layered risks that you'll see that 620 go through. So we'll run the LPA, we'll run the DU. We find that LPA is a little more forgiving, and not just saying that as a Freddie Mac plug. That's what we're seeing.
Thank you, Joe.
But that's where that's the trend right now, and the trend is that you need a 680 or better for those 3%.
Okay. Thank you, Joe. And then there's one in here, Catherine. It says, in regards to down payment assistance, can the borrower pay off prior to selling or refinance? That's from Jenny.
Are you talking about the Maryland Smart Buy paying off any debts? Or again, when you're dealing with a lender directly, they're going to advise you what items need to be paid off in order to make sure that you're meeting the correct DTI and other credit score guidelines. So I'm not quite sure what the question is directing to.
All right.
Catherine, I think I might take a stab at this one. I think I know what they're asking.
Okay.
So if you want to refinance and you don't want to go into that refinance program that is the Maryland MMP offers, which frankly not a lot of takers on that, not to hurt anybody's feelings, but the rate's a little high.
No, the rates.
Then you would have to include that in there, so you'd have enough equity in there to do it. Fortunately, with the run up in prices and values, we've been able to do that, is to include that DPA in the refinance. So it can be sold, and then the restrictions could be removed by taking on another loan. But paying off your DPA, I don't think that relinquishes you from being able to rent the property on MMP, does it? Because you can't lease an MMP property.
Yeah, if you have a loan with the Maryland Mortgage Program, if you ever wanted to rent out your property, you have to pay off the first and second, any liens you have with us, you can't rent. So you could refi out of us and get another get another loan, and then you could rent out your property.
Hopefully that answered that question.
Okay. And Jenny Chen, if you're still on the line, you can, if you need clarity, reach out to any of us. And,
she said answered.
She said answered. All right. Good job, Joe and Catherine. And Susan Silvera asked, how do you suggest competing with buyers who have offers that do not participate in any of these programs?
Well, I would say these programs are not as hard as maybe the myths out there say they are.
Good point.
Is to have your lender that's participating in it make a call as you're submitting the offer. Make a call and explain the program to the listing agent. Explain that it's not going to take an extra 2 weeks. It's not going to take an extra 10 days. It may be an extra 3 or 4 days to do these programs, because Maryland Mortgage Program is a well-oiled machine, and they underwrite quickly, and they do not nitpick loans. That's not what they're there for. They're there to make sure it fits eligibility requirements.
Great answer, Joe. So if you're the lender that you're dealing with, audience, is giving you the misconception that the that the Maryland mortgage program is an elongated process or it's not a good program, contact Joe. He will.
I just got one. I just got a contract accepted layered with MMP and USDA. So that has to get 3 sets of eyes on it. Our underwriter, the MMP and USDA, and it got accepted. Now, not everybody's going to accept that contract, but certainly having that phone conversation with the listing agent is going to help your cause.
I will jump in and say, with the Maryland mortgage program, we are not underwriting your loan. Well, the loan is actually processed and underwritten by the approved lender. When the lender completes their underwrite review and determines that the loan is meeting FHA, VA, USDA conventional guidelines, as well as Fannie and Freddie, and then they put together a Maryland mortgage program loan file, it's submitted to us, and our turnaround time is 24 to 48 hours. Now, if the loan is approved, there's no delay with you guys proceeding with closing because we no longer wire any funds to the closing. The lenders are funding all of the money up front, not only for the first mortgage as well as for the DPA. Once the loan is purchased, then of course the lender gets reimbursed for the first mortgage, and then we as the state reimburse the lender for what they fronted for the DPA, even if it was in the form of a grant or the down payment assistance that was secured. The other thing I will share with you is, yes, if a loan file does get submitted and we see something that might be a concern, or that maybe they didn't fill out some documentation correctly, we will incomplete the loan and we will indicate that there's conditions, and that takes 24 to 48 hours. So, but it's not taking weeks for a loan to get reviewed. Our turnaround time is 24 to 48 hours. And in some cases, we are reviewing files and decisioning them within the same day.
Wow, that's fantastic, Catherine. So right there, that, blows apart the myth that, that you're taking too long to get the deals done. Now, Rosalind just entered in the chat. My client was just approved for a MMP DPA conventional loan, but he still needs additional assistance with closing help. So Joe mentioned a Freddie Mac borrowers program. So what are the qualifications? I don't know if Catherine and Joe, you want to take that offline with Rosalind to go over a specific loan. Would you want her to get in touch with you to go over this specific loan, or do you want to address it now?
Yeah, I mean, Rosalind, my email is Catherine, CATHERAEMER-DALE at Maryland, MARYLAND.gov. If you'd like to email me the reservation number, or actually best suited is to have your lender reach out to me, because we talk directly to the lenders to determine if there's any assistance that they need to move forward with a loan that they've submitted to the Maryland mortgage program.
Okay. Now, let's see here. Oh, Joe or Catherine, I'm having a little technical difficulty here. Do you see anything in the Q&A room?
Yeah.
Jim, I have one you can answer.
Okay.
Chuck Otley asked, once you're CreditSmart approved to teach the course, do you have to recertify?
Okay, that is a training program which is going to be opened up in the fall, and so you'll be able to be certified and go through the CreditSmart financial literacy program. So if please email me, and I'll get you the information as far as the details of the CreditSmart program, more in-depth details, and I'll set you up with the manager of that program, to get you involved with, getting the the certification. Okay, I'm back online here. I was having a, I'm sorry, a technical issue, and I came back up here. So Rebecca asks, is Freddie Mac considered a government agency, or is it considered sort of like an affiliate to the government agencies? Freddie Mac is a government-sponsored enterprise, a GSE. So we were created and you know, and chartered by Congress in 1970. Right now, we're in conservatorship. When we had the Great Recession in 2008, Freddie Mac and Fannie Mae went into conservatorship, which we still haven't been taken out of. We're in the process of raising capital to you know, get out of conservatorship. The FHFA is our conservator. So hopefully that answers your question. Rebecca also asks, is FHA considered the government loan provider in the Maryland program? So Catherine?
Yes, when you look at our rate sheet, you'll notice that we have a 3-tier pricing for each one of our loan products. When I showed you the rate sheet, there's the Fannie versus Freddie conventional, and then the government rate includes FHA, VA, and USDA. Okay.
And Rebecca also asked, the Maryland program PowerPoint presentation slides are dated 2018. Are they the most current, or are they going to be updated?
Yes, the PowerPoint for the Maryland Smart Buy, as well as the PowerPoint for the Maryland Mortgage Program, are relatively new dates because they've just been updated. The date that you're referring to that is in August of 2018 is our lender online eDocs. That's not something an agent would refer to. It's something that the lenders use when they're reserving the loan products with us, as well as uploading loan files for review. That is an old date. It's still current. We haven't changed any of the processes. So it is a current slide presentation for lenders to use to submit loans. It is current. It hasn't had any changes since 2018.
All right, great. Zia Williams asked, can realtors use these programs as well?
Yes.
Okay, there you
The answer
go.
to that is yes. There's no restrictions that a realtor cannot use the any of the Freddie programs or the MMP program.
And Chuck Otley asked, I was already certified and have taught a few classes, just haven't done it in a while. So Chuck, I hope your experience, you know, with those classes was good. Do I have to recertify? Please send me an email. I do not know the answer to that question. I will send it to the managers of the CreditSmart program to see if your certification is still in effect, and you know, we'll get you an answer. And let's see, one more question in the chat from Susan Silvera. Can a buyer utilize more than one program?
Well, regarding the Maryland Mortgage Program, there's one rate for one program on our rate sheet. So if you picked the grant product, that's the grant product you're getting. But we do use the word stacking. So we encourage you to take advantage, and your loan officer will help you with looking at down payment assistance programs from any local city or county programs that may be in the area where the borrower is purchasing. We use the word stacking. But with the Maryland Mortgage Program, you'll notice on the rate sheet, there's one rate for one product. You can't stack our products.
Okay, and Catherine, Rebecca asked, can you put your email address in the chat room, please, for the audience?
Sure.
And Isabel just put in a question. Isabel, please email me directly with that question. I will send that to the managers of the CreditSmart program, and we'll notify you if you have to recertify. Okay, so that's it for the Q&A box. We don't have any more in the chat box. So Adrian, if you'd like to come back on, I would like to thank you and Dan for, giving us this opportunity to talk to your members again. It's been my pleasure and a great opportunity. And it's always, great to be able to partner with Catherine and Joe.
Of course, thank you so much, Jim, Catherine, and Joe. And thank you to all of our attendees for attending today's webinar. Our next webinar is scheduled for June 17th at 1 p.m. where Bill Costelli of Maryland Realtors, along with delegates Buckle and Ludke, will provide a 2021 legislative session wrap up. Thank you again for joining us and have a great rest of your day.
All right. Goodbye, everyone. Thank you.
Thank you, everyone.